Okay, let's get going. Good afternoon, everybody. This is our quarterly digital assets update, title Base Broadening. Before I talk about what that title is supposed to convey, let me introduce our three co-panelists. After me, Chung Wel-young. Hi, Wel-young. We'll begin the proper presentation by talking about the latest trends, particularly in Bitcoin and Ether, and certain analytical findings from multilateral research institutions about how these crypto space is evolving. After that, we have two colleagues, Ma Tieng, He Tieng, and Radhika Rao. In no particular order, maybe Radhika will go before Tieng. They will focus on the digital asset space on the public side, meaning central bank digital currencies. Lots going on there. And the ETFification of the currency is not just something that is happening at the private digital currency space. There are seismic consequential developments happening in the public side as well. So we'll be touching off all that. To those of you who are attending, this is a WebEx video call. At the bottom right corner, you have a chat screen. Please submit your comments, questions there. I'll be monitoring it. And anytime somebody puts out something that is not being captured in our presentation, I will flag it, and one of the three panelists will come over and take it. So just want to add a few introductory observations. This crypto cycle is very different from the last crypto cycle. We will touch on this in far greater detail, not only in this presentation, but also in the digital assets update that we just put out just a few hours ago. Should have a QR code of the publication. If not, you can just Google digital assets update second quarter 2024 on Google, and you will find it. And of course, on our research websites and DBS Insights Directs page. The point that we want to start off with is that the kind of institutional participation, retail enthusiasm, price discovery we saw with the crypto run up in 2020, 2021, when we saw Bitcoin's seismic jump in interest and perhaps usage, but also definitely price and valuation, versus the recent episode over the last 6 months or so, the climb that we've seen, very different. This one, of course, had an institutional development being the fulcrum of the renewal of interest, which was the SEC's sort of approval for using crypto ETFs in the market. And that led to a huge redistribution, if you will, of investment flows from various trusts into the ETFs. And we have large global financial institutions like BlackRock and Vanguard and others with ETF products. Each of them now have 10 billion plus in investment. So that kind of shows to you that the participation from those trusts into the publicly available exchange traded funds has been absolutely astonishing. Just by way of comparison, when GLD, which is the BlackRock or is it Vanguard, one of the ETFs on gold first came out, it took about a year and a half for that ETF, which is gold, very widely understood and widely followed around the world, that ETF to have 10 billion of AUM. Compared to that, what has happened in the crypto space is basically a matter of weeks. So the recalibration of holding has been substantial and even sort of pales the gold run up in assets under management when GLD, the first ETF, came out. So that's the first issue. Second is the, again, harkening back to the title of this presentation, base broadening. We are not only seeing sort of the excited retail investors, talking to each other on social media and taking punts on crypto, just like the way we see with meme stocks. It's far beyond that. Institutional investors, starting with asset managers, but going to hedge funds, we're seeing a broad range of investors, and as well as, far more interesting to me personally is that institutional traders are now taking day-to-day positions on cryptos, looking at correlation between that and news, between that and geopolitical development, and then trying to take positions, short-term positions, if you will. So it is becoming more ubiquitous and more sort of normal as a security than it had been in the past. You could still make the argument that this is basically a digital gold, if you will, but with greater degree of volatility. But I think all those things are evolving. The kind of volatility we saw on the crypto in 2020, 2021 is very different now. It's far more stable. And I think it's a function, again, of the base broadening aspect that I'm alluding to. Anyway, enough from me. Let's get into the nitty-gritties of what's happening on the private digital currency space with Chung Wel-young. Wel-young, you can go ahead. William, your mic is probably mute, and also we can't see you. Tieng, if William is struggling to get on, would you like to do the Ethereum part first? Then we can come back to Bitcoin. Tieng, you're mute.
Yes. Yeah. We do either first.
Yeah, so let's so we will get to Bitcoin later on. William is having some technical problems, but we'll start with Tieng discussing Ethereum's performance.
Sure. So Ether, as we know, it's second largest cryptocurrency. So here we have two charts showing Ether's performance so far this year. So beginning of the year, Ether price was around $2,000. It's increased strongly between January and March. In mid-March, it reached a peak level around $4,000. And after that, there was some downside correction, retreating to around 3,000 as of end of April. And year to date, the rise in Ether price remains significant. It's around 20-30%. It remains significant. On a relative basis, however, Ether price actually is underperforming Bitcoin. If we look at the ratio between Ether price and Bitcoin price, the first chart, the black color line, and we can see that this ratio actually declined between January and April. And another way is to look at the returns. We calculated the risk-adjusted returns. It's a second chart. The one-year returns, absolute returns adjusted by volatility. Then we can also see that Ether price actually has been underperforming Bitcoin so far this year. So what are the key drivers for Ether? We try to identify three key drivers. It's on the next slide. So here are three key drivers we have identified. The number one driver is macroeconomic factors. This is common for Ether and Bitcoin. US monetary policy, global financial appetite, these are macroeconomic factors, that are common factors affecting the Bitcoin and Ether prices. And number two factor is more specific to Ether. It's about a technology factor, because we know that Ether actually is a token on the Ethereum blockchain. So the technology development on Ethereum blockchain, that is also an important factor affecting Ether's performance. And number three factor is also a common factor. It's a regulatory factor. The regulation change in major countries, that is also a factor affecting Ether and the broader cryptocurrency performance. So here we have a chart showing the correlation between Ether and Bitcoin price. So we can see the correlation that remains very tight. It's still around 0.8. Although the correlation has declined to a certain extent this year, it remains significant. So the macroeconomic factors affecting Bitcoin, such as the delay of US rate cuts and also the rise of geopolitical tension in Middle East, these macro factors, they affected Bitcoin performance in recent months, and this also affected Ether price performance. And number two factor is technology factor. It's on the next slide. As mentioned, Ether is a token on the Ethereum blockchain. Ethereum currently remains the largest blockchain. In terms of the total value locked, the TVL is around $50 billion US. As a percentage of the total TVL on all the major blockchains, its share is around 58%, close to 60%. Although Ethereum remains the largest blockchain, it has been facing rising competition from the alternative smart chains. So alternative smart chains such as drones, such as BSC, Solana, their share has increased in the recent years. So 3 years ago, Ethereum, its share in the total TVL was 90%, close to 100%. Currently, it has declined to 58%. And alternative for smart chains, their share has increased close to 40%. So in order to maintain the competitiveness of the Ethereum blockchain, the developers they are trying to upgrade the technology. So one major upgrade is about this POS upgrade, converting from POW to POS, the so-called Paris upgrade in 2022, which was also called the merge in 2022. So converting from POW to POS mechanism, it has reduced the energy consumption on the Ethereum blockchain and also increase efficiency. And another way is to increase the scalability. So this is a very recent upgrade, the so-called Duncan upgrade in March 2024. So the Duncan upgrade, it has created more data storage space for the layer 2 chains connected to the main chain on Ethereum platform. So by doing so, it's reduced the data cost, and it's also increased efficiency and reduced overall transaction cost. So the scaling is another direction for this technology upgrade. We have some evidence showing the success of the recent Duncan upgrade on my slide. So there are some indicators. We can look at the daily transaction fees on the Ethereum blockchain. This has declined sharply after the Duncan upgrade between February and April. Before and after the Duncan upgrade, the transaction fees declined around 40%. And another indicator is the number of active addresses on the Ethereum blockchain, which is also number of active users. This has increased significantly between February and April as well, increased around 14%, 15%. So the technology upgrade seems to be successful. And what is the real reason explaining Ether's underperformance? We think actually it's due to the number 3 factor, which is a regulatory factor. It's on the next slide. So on the regulatory side, earlier this year, there was a high expectation for the ETF, spot ETF, to be approved by US SEC. Some of the major investment managers, including ARK, they have submitted the application, and SEC needs to decide by end of May. And because of the approval of Bitcoin spot ETF, that was also expectation that the ETH spot ETF will be approved by US SEC. But more recently, since there is no news about the concrete details regarding this ETH spot ETF approval, looks like there could be some kind of rejection at the end of this month. So this fading of optimism about the ETH spot ETF approval, that explains why Ether price has been underperforming Bitcoin recently. Well, if we look at the past experience for the Bitcoin spot ETF approval, we can see that actually there's some process. So in 2022, in fact, SEC rejected Grayscale GBTC spot ETF application, and Grayscale sued SEC, and in 2023 there was a court ruling, and finally, beginning of this year, SEC approved Bitcoin spot ETF. That was about like a 2-year process, and when SEC approved the Bitcoin spot ETF, it believes that the spot and futures ETF, in fact, are highly correlated. So the mechanism applied to the futures ETF could also be applied to the spot ETF. That is the reason why it's finally approved. Regarding the case of ETH spot ETF, if SEC judges the correlation between spot and futures ETF is not sufficient, then they will have some reason to decline. And meanwhile, SEC could also judge Ether as a security. It's different from Bitcoin. It could be a security. As we know that Ether is on the Ethereum blockchain, and it uses a POS mechanism, which provides a staking model and allowing the holders to earn some interest. So this could be used by SEC as a reason to say Ether is a security. It's different from Bitcoin. And another thing is that Ether is on the Ethereum blockchain, and it supports DeFi and some other applications. And DeFi, as we know, is highly leveraged and with some high level of risk. So that could also be a potential concern for SEC and the major regulators. So basically, in terms of the ETH spot ETF approval, I think there's still some uncertainty. And between now and end of this year, US potential election, the regulatory landscape may not be very clear. And the regulatory issues that could remain a potential driving factor for Ether performance in the near term. So this is all I have for Ether, and then we come back to William for Bitcoin.
Right. So before we go to William, Ting, one question in terms of excitement among investors, retail investors, traders, institutional investors. Clearly, that momentum is still very much on the side of Bitcoin. Where do you see sort of a catalyst that can launch, Ether back into the sort of the imagination or the excitement of investors?
Well, I think Bitcoin it remains the largest cryptocurrency, and most investors, it's true that they're most excited about Bitcoin. But for Ethereum, I think it has more application cases, and it's more about the blockchain user cases, and it's more about the technology elements, and it's something different for Ethereum for Ether. So global investors can treat these two cryptocurrencies from a different angle.
Right. Okay. Second question that I have is not related to Ethereum, but I just want to hear your view on this issue. I was discussing with somebody earlier today the fact that a lot of ransomware, cybersecurity related ransom is settled in cryptocurrencies. So we are sort of seeing a reputational issue associated with cryptocurrency. That's main use case right now is hacking and ransomware. Do you sort of think that this stigma can be very much a constraint for cryptocurrencies to gain like mainstream acceptability, and could there be regulatory risk where authorities get more draconian on the use of cryptos?
Yeah, cybersecurity remains the key source of concern. Cybersecurity, the integrity issues is a major source of concern. And on top of that, there is also concern about financial stability, the stability of stable coins, and also the high leverage nature of DeFi, and the potential risk of financial instability caused by cryptocurrencies. So I think regulatory concerns remain there. And US side, many people may be watching the upcoming US presidential election, whether there will be some kind of regulatory changes after the election.
Right.
Trump's stance on cryptocurrency is not very clear. But Republicans, in general, it seems that they are more supportive for the cryptocurrency legislation and adoption. So we'll see the election outcome and whether there will be some regulatory changes, especially in the US.
Right.
At the end of this year.
But Ting, so let's look at China, for example, which used to be a big cheerleader for crypto, then completely banned the usage of crypto. I mean, is there any lesson for global policymakers? I mean, has there been a significant reduction in ransomware issues in China because they banned crypto? Or is it the case that hackers find ways around it, that even in China, if they shut your computer down, you still have to pay them somehow in crypto?
Yeah, in fact, China, yes, it's banning crypto, but there's still some ways to arbitrage and to circumvent the regulatory things, because some of the crypto users in China, they can still use some third party, some overseas platform. Yeah, so I think regulatory arbitrage as it's also a very major issue in the crypto regulatory space. So that actually requires the major policymakers, regulators around major countries. They need to coordinate and to formalize and to have some more centralized policy paperwork.
Yeah, so team, this is a very critical issue that, like many other things, also in crypto, we sort of desperately need global coordination. But right now, China is like one of these no man land where, there's nothing officially happening. And the rest of the world, all of a sudden, the Americans have become quite comfortable with allowing cryptos to become sort of mainstream part of finance. But at the same time, I think without worldwide sort of standard setting, rule setting, issues will remain. Like, one thing is that there are so many different ways, even though cryptos are based on blockchain and you should be able to track all the transactions, there's so many different ways hackers use exactly that facility to anonymize their trail, that once you pay somebody ransomware, it's not like the police can come and go through the blockchain and figure out who you are. It's still like next to impossible. Anyway, I think we'll come back to this. There's also a question on NFTs. After a long time, we seeing a question on NFT. We'll come back to that later. Thanks, team. Well, Young, hopefully your connection is working. And so why don't you take over on the Bitcoin side?
Yes, Timus. So sorry for the earlier connection issue. So I'm back. Hopefully there won't be any more issue now. So let's focus on what's happening in the Bitcoin space. So the reasons why Bitcoin had a strong rally this year, I'm sure everyone on this call will be aware. The first reason is anticipation of the halving event, where the reward for Bitcoin mining will fall by half. It has already fallen, and therefore, could that have implications on the price? The second factor is obviously the SEC's approval of Bitcoin ETFs, and that has catalyzed some new inflows into the Bitcoin market. We have seen that coming through in a very strong way in Q1. So now looking back at these events, how have the Bitcoin prices evolved? We see that actually since the halving on 19 April, Bitcoin has eased in prices. It fell from about 70,000. It's now trading close to 60 over 1,000, which by the way is still very strong compared to its end 2023 level. So what are some of the reasons why prices has eased? One is there's been significant anticipation of halving. So to some extent, there could be some profit taking now after the event. The second reason is more technical. So because of this halving of reward, some miners might not find it very economical to continue mining. And for that reason, they have pulled out of their network. So we are seeing the network's hash rate falling quite a bit since the halving date. But this is not a static phenomenon. So in response, because Bitcoin's algorithm targets a formation of a block every 10 minutes or so. And when the hash rate falls, it takes a longer time for a block to be mined. And in response, the algorithm calibrates the difficulty downwards. So we are seeing a lowering of the mining algorithm difficulty that has fallen by about 5 to 6%, which is the largest downward adjustment in difficulty in the last 18 months or so. So to an extent, that is supporting the return of miners back into the ecosystem, is providing some degree of confidence that even with lower hash rates, transactions will still be able to be timely completed. And that's probably going to be the case going forward, given the rewards have fallen so much. The second reason for the decline in Bitcoin is if you look at ETF inflows, they have diminished somewhat since the halving date. If you look at the pre-halving versus post-halving, is very significant change. Before halving, there were very huge inflows after the first approvals of the Bitcoin ETF, but now subsequently we're seeing outflows dominate inflows. So that I think also to some extent is weighing on prices and is weighing a little bit on sentiment. Next slide. But by and large, we think that this is a minor adjustment given the fact that volatility in the crypto space in Bitcoin as well as Ethereum, they are so high. So a monthly return of about 15% or so for Bitcoin in April is not necessarily reflecting any major negative impact. We think that this is by and large reflecting some degree of positioning adjustment, some retreat in inflows. It does not necessarily mean that the question or the value of Bitcoin has changed significantly. So if you look at it on a year-to-date basis, actually Bitcoin is still up by about 43%. If you look at it across the 1 year and 5 year return, is still very much outperforming other asset classes, including the S&P 500, and as well as very very commonly compared to gold, is also outperforming gold. So we think that this high degree of market cap is still likely to be supporting market sentiment. That's not going to change too much in the short term without a major shift in either the regulatory aspect of crypto transactions or some other competitiveness issues. So to the next slide, please. So one interesting thing about Bitcoin is that it is provides very high anonymity. So it's basically thought impossible to map Bitcoin flows between countries because there's no way to actually assign the country origins to individual wallets. But it turns out that IMF has done rather intriguing work to try to map flows to countries. So what have they done? They have identified the wallets of a large number of Bitcoin exchanges, and by mapping the transfer between these exchange wallets to the individual country traffic, web traffic going to these exchanges, they could tease out, making some assumptions that the proportion of Bitcoin flows is the same as with the web traffic. They could tease out the degree of flows between countries. So it paints a very interesting picture. So over here we have a map of the world where the darker green area shows a high extent of Bitcoin inflows and outflows scaled to the individual country's GDP. And this map shows, I think, very much what everybody would think, which is that Bitcoin is a global phenomenon. Every country, whether advanced economies or emerging market economies, is very active, has seen quite active Bitcoin usage. And somewhat more surprisingly, emerging market economies have higher Bitcoin usage as a proportion of GDP compared to advanced economies. So this to me was a surprise because the fact is that Bitcoin is a very highly technologically sophisticated product. Usually emerging market economies, they are somewhat behind the curve in terms of adopting technology. So the fact that it is the emerging market economies that are leading this adoption shows that actually Bitcoin has lived up to its promise to be more inclusive than a traditional financial system, especially to less well-developed economies. So on this chart over here is on this map over here is fairly straightforward to see that countries that have the highest intensity of Bitcoin usage, they are located in Latin America, they are located in Eastern Europe, and they are also surprisingly located in Southeast Asia. So the majority of which are emerging market economies. Next slide. So having mapped this cross-border flows, the IMF also look at whether these flows are significantly different in terms of their response to macro drivers compared to traditional portfolio flows, i.e. Your bond flows and equity inflows across countries. And it turns out that actually the results are somewhat surprising. So for instance, traditional equity and debt flows, they tend to be lower when the volatility in markets are high, which is not too surprising because when market uncertainty is high, investor sentiment is more negative. They're more adverse in terms of deploying capital in either the equity and debt markets. But the opposite phenomenon was observed for Bitcoin flows. When the VIX index is high, i.e., when market volatility is high, the IMF noted a significant increase in Bitcoin inflows as well as outflows. So that shows that actually Bitcoin can be considered to be somewhat speculative in nature, and that it can be used to some extent to hedge risks related to volatility by market participants. In terms of the second response to the broad dollar index, which is used as a proxy for credit conditions. So unsurprisingly, when the dollar is strong, where credit conditions are tight, equity inflows and debt inflows tend to be smaller. There was no significant effect, however, for Bitcoin, which shows that Bitcoin is more or less immune to what the dollar is doing or what global credit conditions are. But one interesting factor that the IMF researchers found was that this crypto fear and greed index, which is an index measuring investor sentiment based on various factors, including momentum, including the number of mention of Bitcoin in Twitter posts. This fear and greed index has a very strong correlation with Bitcoin inflows and outflows. So when investor sentiment is very high, when momentum in Bitcoin is very strong, that's where you see a very large increase in inflows and outflows. And somewhat surprisingly, this crypto-specific factor actually do have an impact, a small impact though, on net equity inflows. So when sentiment in crypto market is strong, the researchers found a positive correlation with net equity inflows into emerging markets. So to some extent, that corroborates with previous findings, which is that Bitcoin is considered as a risky asset. It tends to correlate well with equities, and we can see that flows behave quite similarly, or at least they respond similarly to changes in sentiment. So beyond looking at global factors, the IMF also look at whether domestic factors can play a role in this cross-border flows. And they found out to their surprise that inflation actually is a big driver. It's not necessarily the case that inflation will move the needle in equity and debt flows, but when inflation is notably different in a specific country, when it's higher, they tend to notice that a change in both inflows, a positive change in both inflows and outflows. So that speaks to some degree of hedging motive on the part of Bitcoin investors in terms of using Bitcoin as a hedge against inflation. So that could be one reason why the flows are somewhat responsive to domestic inflation. In terms of domestic rate differentials, there was not really very significant results. So that is also a bit of a surprise, given that if Bitcoin is considered an asset, then it should be the case that rates will play some influence or will have some influence on flows. But on the contrary, there was not a significant impact found. And the last factor, which I think is the most interesting factor, is that they also look at whether the parallel exchange rate premium, which is basically the premium that that residents are willing to pay in the black market for foreign exchange, compared to the official exchange rate. So when there's a huge or when there's a large parallel FX rate premium, that's when there's a very significant Bitcoin outflow. So I think that speaks to the fact that residents could be using Bitcoin as a vehicle to circumvent capital controls. And when there tends to be macro imbalances, when the foreign exchange rate in the black market is higher than in the officially set exchange rate, that's where you see higher Bitcoin outflows, and it basically indicates that Bitcoin is in a way a safe haven asset for countries with significant macro imbalances. Right. So with that, I will pass over to Radhika for a section.
Okay. Before Radhika, let me ask you a couple of questions, Wei-Liang. So on the chat, we have two questions. I'll take the NFT one. Let me ask you the other one. It's a bit of a broad-based question. What is the future position of Bitcoin and Ethereum? Seems the current state of Bitcoin is more on trading speculation. Do you foresee any broad use case on Bitcoin, Ethereum?
So it's an interesting philosophical question because Bitcoin Ethereum to me serves two different purposes. So Bitcoin was originally envisioned as an answer to fiat money, the constant expansion of money supply, and the insecurity caused by ever-rising sovereign debt, which potentially could have inflationary consequences and have value destruction. So Bitcoin was ultimately intended as a vehicle for its users to preserve wealth as an alternative to fiat money. And to some extent, it serves its purpose well. It's not necessarily the case where Bitcoin is used in many transactions today. But if you look at how the value of Bitcoin has evolved over the last decade or so, it has continued to hold its value well. So that suggests that it is serving its purpose as a long-term store of value, even though there's a huge amount of volatility that renders it somewhat impractical for day-to-day transactions or to make its use as a medium of exchange somewhat more effective. Ethereum, if you look at the most recent developments, they have been looking at scaling basically the network throughput, the transaction throughput that Ethereum can offer. So I think the long-term goal of Vitalik Buterin, who is the founder of Ethereum, is that he wants Ethereum to be a development platform for the new decentralized economy. So it's not just about money, it's about using Ethereum to power various decentralized applications. So there's a bit of a divergence in terms of what Ethereum offers. And for some investors, they are more interested in innovation, in terms of decentralized finance, in terms of NFTs. The Ethereum offers an avenue and exposure to that that's completely different from what Bitcoin is offering. So I think they both serve their niche in relatively interesting ways. They're probably somewhat different behavior. Also suggests it also is a reason why if you look at the beta of Bitcoin versus Ethereum has far higher beta, simply because it's also has potential implications. It has potential room for usage beyond just money, but to other areas of the economy as well.
Thank you, William. Good points. The other question, this was from Herman Lee Wen, which is that with the rise of non-fungible tokens, what do you think the future holds for digital ownership and the monetization of digital assets? So look, regardless of the crypto winter or the crypto sort of revamp of demand, NFTs have been around. They haven't really faded, particularly gaming-related NFTs and sports-related NFTs, even political NFTs. I hope some of you guys know who are on this call that Trump has a bunch of NFTs and they've been trading well. And in fact, last week, although he has been stuck in New York attending a trial, he actually came to Florida because he had a dinner with a bunch of NFT investors. So the NFT space is out there. I still see it as a bit of a niche, but all its potential, during the go-go days of DeFi, we used to talk about how from property records to art to music, all sorts of things, the copyright and the way the creator receives money, everything would be revolutionized by NFT. None of those rationales have gone away. It's just that the crypto bust put a dampener on some of these things, but I think that continues still. Let's not also think that NFTs are some sort of a perfect solution. They have their own issues. I've recently read stories about phishing attacks and NFTs disappearing. I think in the Bored Ape, the famous NFT of the past, several very rare, very valuable ones have disappeared because of cyber attacks. So the crypto space is also susceptible to cybersecurity issues, just like the real world is. So let's keep that in mind. So I think in terms of digital ownership and monetization of digital assets, NFT use case is still rather intriguing. But I think we need that whole base broadening to, again, go back to the title of today's presentation, to become entrenched. That would then, again, I think have a complementary and positive impact on the ecosystem of NFTs. All right, let's move on. Radhika, your turn.
Thanks, Taimur. So let me take the last part, which is to do with being as close to fiat currencies as possible. So we're talking about the central bank digital currencies. And I think what I want to start off with is just to give you a sense of what's the spread like in terms of globally, how many takers, what process, or which part of the cycle they are on. And encouragingly, about if from about 35 countries back in 5 years back, you're actually seeing about more than 130 countries now partaking in this development. Albeit there are, of course, different parts of the cycle. Some, we do think that half of these countries are in the advanced phase. So we would define that to mean development, pilot, or launch stages, while the rest are still, studying, considering. And similar to, in fact, what William pointed about Bitcoin, here too, you actually see emerging markets much ahead in terms of their own pilot studies, while advanced economies are a bit more careful. Particularly the US, you've seen retail CBDC, for instance, literally stall in even the discussion of the studies as the presidential elections draw closer. We'll come to Europe in a bit, but relatively speaking, the advanced economy, as the emerging economies led by China, for instance, are way ahead in terms of experimenting and conducting pilots and conducting onshore actual transactions as well. From this, we go to the next, which is, it's not only a country-specific action. Many of the global central banks, multilateral organizations, including BIS Innovation Hub, are trying to see how CBDCs can be utilized across borders for cross-border transactions. I think one of the advantages is certainly speed, accuracy, as well as cost. So I think you've seen various projects come up in the past 4-5 years, and here it shows you who are some of the front runners. Certainly BIS Innovation Hub in dark blue here leads, followed by France, followed by Singapore, for instance, and the rest, as you can see on the right. So the idea is that you get as many parties involved. Some of them could be your trading partners, or some of them could be where CBDC development is ongoing quite actively onshore as well, to see if this can be improved and transactions can be made faster. And on the same note, you actually seen an important financial transaction of financial infrastructure provider, which is SWIFT, take part in this. They've also been involved in pilots of their own. The first one was back in 21-22, which was conducted over 2 phases. And at that point, it was just to kickstart to see whether, because many of the financial institutions have their own CBDCs, so they wanted to see if they can enable interoperability between these CBDCs. Also see if these CBDC networks and the existing payment systems could be connected and transactions could be upheld as well. And at the heart of it was to simplify and speed up trade flows. And that was done back in the first pilot. At that point, you actually saw less than 20 financial institutions or agencies being involved. Fast forward to now, 23-24, the pool is much bigger. As you can see, the 38 central banks spanning a mix of Asian or emerging markets and developed countries, commercial banks, as well as other infrastructure providers. And here, the exercise has been a bit more complex in the sense they have done the basic checks, and now they've run some actual cases. They've got some use cases that they have described in their own press release. And they try to stimulate, in fact, something called the atomic trade payments. That is basically simultaneous payments alongside transfer of assets. Other than doing assets first and then the payment, they're trying to do it concurrently. The other area of interest of late has been tokenization. And I think there too, it kind of suffers from not being interoperable enough. So I think they've tried to address that as well. And also, and as the next slide suggests, they've tried to take the trade angle, the FX angle, as well as some of the delivery payments aspects as well. So these are ongoing, and it's been much deeper than the previous exercise that they've done. I think at the heart of it, again, is to make sure that the existing infrastructure can be reused. And I think if you were to talk about the way forward, in fact, for many of the users, they want to make sure that agnostic of the asset class and technology platform, they would like to be interlinked. At the same time, they wanted to be a single point of access. So obviously, all the users want CBDCs to be as seamless as a transaction based on real currencies. So that takes me next to the country-specific examples. And China, as I think we have discussed in quite detail in our previous, updates, digital updates as well, you've actually seen China being much ahead of the curve compared to the other countries. Again, options like in one of the provinces, the local metro facilities facilitates actually e-CNY payment even when the US user balance is low. Now, provided you are using a digital yuan debit card or a special SIM. So this just shows you what the e-CNY looks like in terms of its digital platform. Then takes us to many other country initiatives. I think we have covered that in greater detail in our report, which was released earlier today. I'll probably just talk about Europe a bit because I spoke about it right at the start. Europe's initiative is in early phases of development. Here too, you've actually seen the exercise begin in 2020. In 23, they laid out a 2-year preparation phase. So they're still working, exploring accessibility, interoperability, security. And in most of these Western countries, in fact, you do have an worry about privacy. And I think that's, again, a problem the emerging markets also face. But I think in developed markets, it's much more the case. And so it's kind of wanting to address the populist worries that privacy will become an issue. And that's where European authorities are kind of stuck as well. Nonetheless, you've seen more and more voices now, including the member of the executive board of ECB recently saying that, we can't do this, we can't fall behind in our payments ecosystem. We need to conduct on-time pilots and trials. This will also provide, something that can be across different member countries. At this point, there are various payment networks, but, if CBDC is taken up, it could be something that's common across the region. So that's where we are. Again, I think if you were to hear the official comments, it looks like anything concrete will only be perhaps done by 28, 29, even though we are somewhere in the preparation phase at this point. In terms of Asia, we spoke about China for a bit, just to touch upon India. India is the other country which has been actually running quite a sizable pilot. It's expanded to about 1.3 million users. Again, quite small when you compare the population at large. But nonetheless, they've been able to exercise it across about 300,000 merchants. And they're trying to see if this can be utilized by corporates to give employees for business travel. So try and get more use cases as we speak. So in a nutshell, I think overall the countries as well are trialing onshore with their own players, with their own infrastructure, with their own commercial banks, merchants, what have you. And then they're also doing a lot of cross-border initiatives. In fact, as we speak, there are about 20-25 cross-border initiatives that are going on and continue to be built. I think with this, I'll end and open the floor for questions or Taimur's remarks. Thank you very much.
Thanks, Radhika. I don't think we have any more questions, so let me sort of take a couple of questions or mix a couple queries to you, first of all. So in terms of, earlier we were talking about the NFT space or the digital asset space on the private side. All of them, China is a bit of a no man's land. Nothing is happening there. And then in the rest of the world, particularly in the US, there seems to be greater amenability toward the usage of private digital currencies in the public exchanges. Now, on the CBDC side, a couple of years ago, we've been writing this for almost 5 years. Every quarter, we do write this digital asset report. And a few years ago, we were very excited about the potentially path-breaking developments in China. I remember our colleagues Nathan Chow and Samuel Say writing about the various pilots that were happening in parallel with the Winter Olympics in China and other games that, various towns were getting e-wallets and e-RMB was being deposited there. Has that stuff kind of fizzled out?
No, that's I wouldn't call it fizzled out. So I think the pilots, the use cases continue to be built. I think it began in a way to allow more domestic merchants and provinces to try and use it. In fact, even in one of the provinces, I remember that it was being given out as public servant salaries were being given out in e-currencies instead of just a bank transfer, for example. So I wouldn't think the momentum has slowed. On the side, completely unrelated perhaps, is also that one of the I think official or personnel who was leading this PBOC's efforts to create and issue digital yuan has unfortunately come under investigation for violations of some discipline and law. That aside, I don't think that would have put a stop to this, perhaps just some regulatory hiccup. But coming back to China's use, I do think that they haven't slowed down. I think they continue to experiment, but across, they haven't introduced it officially, but they haven't given up on it either. And so first step, like you mentioned, it was firstly domestic, and now then they had spread it out to any sporting occasions, any international use occasions where they could, Olympics was one such platform, and thereafter they, I think, even allow now international credit cards to be used to transfer money or to convert into ECNY, for instance. So again, trying to make it usable also for foreigners who come and visit in China. So perhaps the delta of new use cases has slowed down a bit, but I don't think they've given up on the initiative, so to speak. And I think the initial push was also to move away from private currencies into public currencies, so that very much stays in place.
Okay, that takes me directly to India then, because there both you and I have heard the governor of RBI express great deal of skepticism about the private side of the digital currency space. That position remains entrenched?
Certainly, yes. I think in all public platforms, the government as well as the central bank has been very categoric in highlighting that the private digital assets, cryptocurrencies in particular, are a no. It's a purely speculative asset, and they don't attach any credibility, legality to it. And I think they're taking that opportunity also to switch focus towards the CBDC or the e-rupee. And try to push it. In fact, I do remember a month or 2-3 months back, there was also a huge advertisement in the local papers to push and ask people to actually try and pilot it on their own. There was a QR code. You can pick up information and try to see if you can use the e-rupee, a small amount, but nonetheless use it in e-rupee. So yeah, on the crypto part, on the private asset part, they are very clear that they don't support it. And this you see it as a purely speculative investment.
Thank you very much, Radhika. Let me go back to Wei-Liang. Wei-Liang, big question to end our call, which is, how do we analyze the price of Bitcoin in future? I mean, is the current price undervalued? Is there any basis to value these crypto? Wei-Liang?
All right, so the quick response is that it can vary between 0 and some very high number. 0 in the case where nobody actually uses Bitcoin for any transactions in the future. But the very high number is bounded by the ratio of Bitcoin to the global fiat money supply. So imagine in a world where transactions can be done in either fiat money or Bitcoin. So that also means that it's effectively good money will drive out bad money, right? So if Bitcoin is the price of Bitcoin is too low relative to fiat money, so what people tend to do is they tend to hoard Bitcoin and use fiat money for their everyday transactions. And to some extent, that was what happened in the 1960s, 70s, when the US dollar was still pegged to the gold standard. But the fiat money supply was constantly expanding, whereas the amount of gold reserves the US was actually holding pretty much unchanged. So people were just using fiat money, but they were keeping or they were redeeming the fiat money for gold, resulting in this in the US giving out on the gold standard. So so that's how you can think about it over the very long term. But in the short term, obviously, Bitcoin, given its high volatility, it's not practical for it to be used to price transactions as of now. So it's really a bet, a gamble, I would say, on how far the world is going to change in the next 10, 20 years, whether the average person on the street will be willing to accept Bitcoin for transactions. And if that's the case, then we could expect Bitcoin to have a far higher trajectory from here. So this is a difficult question for sure.
Right. So I think in terms of the wisdom of holding Bitcoin, it doesn't seem that there are any structural flaws or pitfalls that would make one to be very, very careful about holding it. I think the system seems to be pretty secure. And as long as there are crypto enthusiasts out there in the world willing to assign a value, I see it remaining okay. The only spoil sport could be that there's a huge cyber scam somewhere in the world, or some big sovereign level hacking going on where the payment for that is settled through cryptos, and then the regulators come down very, very hard on crypto. I think that risk everybody has to be cognizant about, but it's very, very difficult to put that in place because that's a discrete event. That's not something that we can price in very easily. Okay, we will wrap it up right there. Wenyang, Tiying, Radhika, thank you very much. And thanks to everyone for joining in. We will continue doing these things. Actually, we now have a monthly digest that comes out on crypto developments, and then every quarter we do the webinar. So you will see us in your inbox more frequently than before. But as far as webinars are concerned, once a quarter. Until next time, take care, everybody. Bye-bye.